Hey guys, welcome back to the channel. Today I want to go over the ICT Silver Bullet session for the AM session from 10 a.m. to 11 a.m. on June 9th. I'm going to show you the setups that you should have taken or could have seen, and then I'm going to show you my executions from a funded account that I'm learning how to use a different system on. True transparency, I'm going to show you how it works. So first of all, when we come here, we know that it's been trading higher most of the day. Okay, London was over here, down here, past the new week opening gap, kind of comes down kind of towards it, and then just starts going higher. Okay, so we're taking out a lot of buy side liquidity as we're coming up. You can go to the 15-minute, the 1 hour, higher time frames. You can see us breaking structure up there. Okay, we're taking out a lot of liquidity. So when we start the 10 o'clock hour, which is this dark gray area, you see a short-term high being taken. You see another short-term high being taken. Then you see another short-term high being taken. And then finally another short-term high being taken. Okay, so let me just explain something really quick. I consider this the swing low that was the catalyst that took out this swing high. So that is the swing low that I'd want to see broken for a market structure shift. Again, this one would be the swing low that took out this swing high. And ideally for me, it would also be the one that took out this swing high, because a one candle is not enough of market structure for me to make it work. So this would be the structure that I'd want to see broken for that if it was going to reverse right then. This swing low is the swing low that was the catalyst that took out the swing high here. So if this one gets broke, it's a market structure shift, okay? As you see, price comes down, creates a swing low, takes out the swing high, and then comes down and breaks this. There's your market structure shift. And then what do we see? Looking left, we see a fair value gap right there. It comes up, gets respected. Your stop goes above the swing high here. Technically, it should be above this candle, but the high is right there, so I just go equal with that. And ICT says shoot for 10 handles. There's your 10 handles. So you get in there. Where's your draw on liquidity? It's right here. There's your 10 handles. Now, ideally, if you had multiple contracts, this would be your first partial. This would be your second partial. And this would be your third partial. Okay? So as price is coming down, you see it breaking this short-term low here, and price comes back up. What do you see? Is there a way to get back in this trade if you wanted to? There's a fair value gap right here. So you could get in again with your entry right there above the swing high here. 10 handles is still at the same target. If you pull the fib from here to here, you see that we're close to optimal trade entry as well. So that's why I was confident in that trade. Oops, let me go here. And then it takes you out. You get in there, and then price comes down and takes you out right there and there for those two 10 handle moves. Notice how this fair value gap also gets respected over here outside the 10 o'clock hour, still before lunch, so it's still a tradable time frame. Okay, so now I'm going to throw on my executions. So let me just show you here. I'm going to put them on over here. You're going to see executions throughout here. See how they show up? You see one there, a couple there, one here, one here, one here. So you can see, I'll see the labels if you want the labels like that. Okay. So let me explain why I took these trades. Okay. As I said, I don't like these one candle pullbacks. Let me show you this. I don't like these little swing lows. I like the major swing low that took out the swing high. Okay, so here's why, and I'm going to show you why I took these trades on and why I don't like that structure. Okay, if you're looking at this as a swing low that took out the swing high, you would see as this broke through that, you'd see a market structure shift right here, and you'd see a fair value gap right here. Where did I take the trade? Right at that fair value gap. Okay, expecting it to go down. It doesn't. It goes way higher. Then you have this one where you have, hey, this is a swing low here. If you look at it, there's a swing low right there. Swing low that took out the swing high right here, right? Comes down, breaks that structure. Where's the fair value gap? Right here. Where do I get in? Right at the top of that fair value gap. Well, guess what? I have major drawdown. From here, all the way to here is, let's just measure it. From here to here, I had, 5.5, 3, almost 6 handles of drawdown. So then, market structure shift right here, and then you see this one, where's my stop? Where do I take my order? Right here. Right at the fair value gap. Just like I said. And I took these two, I took them right here, which is right here, which is below this one. I was in such a severe drawdown that I just wanted to have an easy win and get them out, because it was a new account and I didn't want to have severe drawdown, so I just took the easy win right there. This trade here, I knew what I was aiming for, and I was aiming for, down here, lower. It didn't take me out. Again, it didn't take me out like I wanted. So as it came back up, I did move my stop order to break even here as it was playing out, and this took me out right here at break even. So right here. Knowing that price stopped at this fair value gap and my target was still down here, was still down here. I wanted down these below here when I came back up here, so I got back in. I entered right back in. I entered there. I know it's outside the window, but I know how to read market structure, and I was confident that it was still going to go lower. And I got out right below these lows here. Targeted these like 11 handle. Got 11 handles out of this one. Had it not taken me out here, would have been, still would have aimed for right here. Would have got 12 handles, but it took me out, so I entered right there because I didn't want to be taken out. I literally got taken out right at the top, like one tick away from not being taken out. So I just re-entered. I just wanted to show you, had I waited for this to be taken out, I wouldn't have entered here. Had I waited for this to be taken out, because this would have been the same one, I wouldn't have entered. It wouldn't have entered here. I entered here because this swing low was the swing low that was the catalyst that took out the swing high. So that is a true market structure shift. That's a good entry. And then I just would have been targeting my 10 handles and would have just got out right here and been done. Instead, I had to lay up for these two right below this one. And then I moved my stop to break even here. And it came back up, took me out by one tick. And then I re-entered immediately. And then got out below after these, taking out that low. Those are the two Silver Bullet trade setups for June 9th.